for example, is not able to obtain the additional financing, then these projects would ultimately suffer. The government has increased the federal excise duty on the lubricating oil, on the cement, and particularly on the travel, on which the FED has been significantly increased. Alright, so if you look at the overall stats and the numbers, the total revenue target for the current fiscal year has been kept at 17.815 trillion rupees, which is 46% more than the last year achieved target of 12.199 trillion rupees. And if you break down this total revenue into tax revenue side and non-tax revenue, so the tax revenue has been budgeted at 12.97 trillion rupees, which is 40% more than the last year achieved target of 9.252 trillion rupees, and there is a difference in terms of amount of rupees 3.78 trillion. And if we look at the non-tax revenue side, so that has been projected at 4.845 trillion rupees, which is again 64% more than the last year achieved target of 2.947. The government overall looks quite positive and optimistic in achieving the tax to GDP ratio of 10.44% for the current fiscal year, as compared to the last year achieved target of 8.7%. The growth rate of the last year was negative 0.21%, whereas government anticipates that the growth rate would remain at 2.38% for the current fiscal year. The overall fiscal deficit in term of including the provincial surplus in term of numbers has been projected at 7.283 trillion rupees, which is roughly around 5.87% of the GDP. And the federal government in the current fiscal year has to make two important payments. One relates to the interest payment, which is roughly around 9.775 trillion rupees, and the other one is the share of provinces, which is 7.438 trillion rupees. So if we add up these two payments and reduce it from the total revenue target, the federal government would be left with 602 billion rupees only. What does this mean? This means that the defense, the pension, the emergency, the running of the governments, all other projects will have to be done only through the additional financing. If the government, for example, is not able to obtain the additional financing, then these projects would ultimately suffer. So if we talk about the significant highlights of the Finance Act 2024, starting from the tax rate side, the maximum tax rate of the non-salaried individuals and association of persons, which is also known as the partnership firm, the government has increased the maximum tax rate to 45% of the taxable income, as compared to the maximum tax rate of salaried individuals at 35% of their taxable income. There has been certain changes in the slabs of the salaried individuals as well, excluding the additional levy which the government has imposed of 10% on the tax imposed under Section 4AB of the Income Tax Ordinance 2001. Regarding the export of goods under Section 154, the government has made two changes basically. So one change is regarding the regime of the export of goods. Previously, the export of goods were classified under final tax regime. Now they are going to be classified under minimum tax regime. And the additional advance tax of 1% has also been imposed on the export of goods. Section 154 read with Section 147. If we talk about the category of persons, there has been some changes in the 10th schedule of the Income Tax Ordinance. So if we talk about the category of persons, so previously they were either active taxpayers or non-active taxpayers. Now the third category has also been introduced, which is known as the late filer. So if a person files the return but after the lapse of the due date, the person would be considered as a late filer, and the person will not be able to enjoy the rates of the active taxpayer. So the separate tax rates have been given for the non-active for the late filer, particularly in case of immobile property sale and transfer of immobile property. If we talk about other revenue measures which the government has taken in order to achieve the additional revenue of let's say 3.718 trillion rupees, the government has significantly increased the penalties and has also changed the mechanism of levying the default surcharge. Regarding the capital gain on disposal of securities and immobile property, previously there was the benefits were available based on the holding period of the particular asset. So now there would not be any benefit based on the holding period, and a flat tax rate would be applied disregarding the holding period. So, and if we talk about the indirect taxation, sales tax in particular, so many items items have been classified from the zero rate regime and exemptions to the standard tax rates, or the reduced rate taxation has been introduced at the rate of 10%. So again, this measure has also been taken to achieve the desired revenue targets. And if we talk about the federal excise duty, the government has increased the federal excise duty on the lubricating oil, on the cement, and particularly on the travel, on which the FED has been significantly increased. See, we need to work on certain other factors beside imposing the taxes and taking the revenue measures. Number one would be to bring the political stability in the country, which is very much important to restore the confidence of the investor, particularly the foreign investor. Number two would be to reduce the trust deficit between the taxpayer and the tax administration. We need to take certain measures which will help in reducing the trust deficit. Number three would be to formulate and implement the investor-friendly policies, and those policies should be consistently applied for a short-term period of, let's say, 5 years, or for a long-term period of, let's say, 15 to 20 years, and those policies should not be changed with the change of government. Number four would be to use already available data effectively to increase the tax base. We already have sufficient data available with the FPR of the unregistered persons and the non-active taxpayers, and those persons can be we need to work on to bring those persons into the tax net so that the burden of the existing taxpayers can be reduced. Number five would be to impose the taxation across the board without any discrimination. We already know that there are certain sectors which are contributing more towards GDP, yet they are exempt from taxes. And lastly, the government should also work on reducing the expenditures of running the government significantly, which again will help to bring the economy in the right track and in the right direction.